Yes, so in Forex 105, 104, actually. So here we just want to mark our highs and then our lows. And also do a multi time frame analysis in order to understand price difference. So the moment we have this in this session here, then we would be closer to summarizing everything. So let's start with the first one. In order for a trader to be able to mark their highs and their lows, you need to understand the concept of time. And the concept of time is basically knowing that we live in time, and time is subdivided into, so we have the whole concept of time, and then we have maybe year. We go on to the monthlies, month, weeks, and then daily, and then we can now go into the hourlies. So in trading, it's also important to understand this concept here. So you have to always start by what is the high and what is the low in terms of time. Here, so here, this is where we talk about like the high, the yearly high, or you would have the monthly high, weekly highs. So from these highs, that is where we get to plot our resistance. And also from these lows, so in simple terms, from the highs, so the highs give us our resistance, our possible resistance areas, and then the lows also give us another information. So the lows give us our possible support areas. So once you have that, then the next thing is higher time frame price difference. So with higher time price differences, this is whereby you have PD on higher time frames. So this is where you have a strong, just to start with the last one, here you have a strong candle break when the market is going up, and then this is where the difference between this and then this is what we call our price difference, and that's where we begin to work from. So let's just go straight into the charts and try to break this down. So when we're talking about the concept of time, so let me use another pair. Let me use NZD, JPY to illustrate my point. So you would have the concept of time in regard to this time frame. So let's say we are on the monthly chart and we want to mark our highs, because remember, in trading, the best thing you would want to do is you want to be able to sell high and then buy low. That's the simplest thing. So for us to do this, we must understand where our lows are and where our highs are. So like, for example, this is the high. So you can always mark it like that. So you get this tool and you mark that high. So that is the potential place for the resistance. The same thing you would also mark this high. So once you can be able to mark the highs like the way like that, then whenever price returns to a former high, that is where we want to take advantage or begin to look for trades. The same thing you would mark your lows. So when price return to these lows, that is where you are likely to get your support. And this helps you to identify how to buy low and also how to sell high. So once you have this, then the next concept is using PD, price difference, to mark our possible resistance and support formation. So let me go to EuroCAD and explain that. So you would have EuroCAD. Again, I'm going to use Owanda. So EuroCAD on the monthly. So what you want to see is a scenario whereby the market has been going up, and then all of a sudden you have a very strong break. Now this break takes away this low and all of this low here. So you can mark this. This is your price difference. Now, why do we call it price difference? This is because the high, which was here, and then the new low, which is here, the difference between this low and this high is usually in the middle here, where price broke certain lows here. So that's the concept we call price difference. So when you incorporate this now, you would have a scenario whereby now let's look for a strong candle break. So when price was headed up here, so price was going up, and then we are looking for a strong candle break. So you would see you have your strong candle break here, this one here. It has to be a strong candle break on a bigger time frame. So the moment you have that, you mark it, then you want to see. So this definitely becomes your high, and then this becomes your low, the new low, which was formed here. So you want to get the difference between this. So now here, this is where you come and mark where did this candle break exactly. So here, this took away these lows and then this low. Then now this is where you actually have your, so when price returns to this area, that is where you would have your resistance area. So the concept in simple, you look for a strong candle break on a higher time frame, and that is where you will have your resistance. So let's continue to plot more. So you look at this candle. This one here is also another strong candle break. So you mark it like that. And then when price returns to that, that is where your next resistance is going to be formed. And then now you can come to a lower time frame and begin to look for trades around that region. And that is where trading takes place. So if you look at this concept, this is on the daily here. Remember, this is what we had marked. So now you would have this as your resistance area here. So whenever price return to that area, that is where you would have your resistance. So it is important for you to know that this is where you would have your resistance. So you just did one thing, and this is where you continuously add resistance, even as price is happening now, that is where we also had resistance. So those are the concepts you just need to employ. So that is one thing, using highs. And then the next thing is the highs. So you combine the highs and price difference to identify support and resistance areas even before they happen. So that's one of the first steps. So the moment you have this, then you are now closer. So check our next video where we break down entries. So we'll talk about entries.